What's up, Facebook? Ty Crandall with Credit Suite here. Today, we're talking about money and how to get money for your business. We're actually talking about alternative ways instead of bootstrapping your business, instead of using your personal credit, your personal funds, borrowing from friends and family, which statistically 75% of business owners do to get money. We're going to help you not do it that way. We're going to help you come in and stop bootstrapping your business. And we're going to talk about 9 easy to qualify for loan and credit line options that can work for you instead of bootstrapping your business. So again, if you don't want to use your own credit to be able to get money, if you don't want to use your own assets, if you don't want to use family and friends money, as 75% of business owners do, well, this is a stream for you because we're going to talk about a bunch of ways you can get money without bootstrapping your business. So Steve, thanks for coming in. Jerome, what's up, man? Thanks for coming in. Lamar, welcome. Thanks for coming in. All right, so here we go to the chalkboard today. Okay. So bootstrapping your business. Well, what we're going to do is, and look at that, my chalkboard artist is awesome, right? She does good on the chalkboard. The whiteboard's not as great, but these kind of things are cool. So consider these funding options instead. We're actually going to talk about 9 different ways that you're able to get financing for your business today. So again, if you're trying to use your profits to grow, what if there's no profits? Or, it's harder to do this because you're using your profits to pay yourself and grow your business. But when you have access to money, then it's just a lot easier to do because you're able to get your business off the ground, produce more revenue, then use the revenue to pay yourself and to fund the business. Sherry, hello. Thanks for coming in. So let's talk about number 1. Of course, I'm a little biased. It's my favorite, but business credit. So I'm starting with business credit because this is something anybody can get. So if you haven't dove in and start building your business credit, it's something you definitely want to consider because when you build business credit, anybody can get it. You don't need one of the 3 C's that you typically need to get a loan. Typically, to get financing, you either have to have cash flow, credit, or collateral, and the more of these 3 that you have, the more money you get. Well, business credit still allows you to get really high limit accounts without the cash flow, credit, and collateral. Now, if you're not familiar, of course, we're talking about credit that's in a business name. It's not in your personal name. It's not linked to your social. It's linked to your EIN. And if you're building it the right way, well, then it saves you a ton of time, and it also saves your consumer credit scores. And that's a big deal because 1/3 of your consumer credit scores is based on utilization, which means if you're using credit cards on the consumer side to fund your business, then the problem with this is that it hurts adversely the 30% of your score, or nearly 1/3 that's based on utilization. Plus, you're putting inquiries on your credit report, which adversely affects the new credit section of your credit report. So save that 40% of your credit report, and by building business credit, you're avoiding the consumer scores and building this under your business name, which gives you a heck of an advantage. Now, in order to do this, and it also gives you legitimacy as well. So in order to do this, few steps we're just going to briefly highlight here. If you need a DBA, if you have a DBA, include that in your business name. Get your business name set up. Get a website and a professional email address. Use a business phone on applications, not a mobile phone, not a home phone. Get it listed with 411. Get a fax number. Use a real physical business address first. Second, use a virtual address. Third, use a home address at last resort, not a P.O. box, not UPS. Be careful with home addresses. Nowadays, DMB, for example, is putting a Google Street View of your address on your report. So just keep that in mind if you're using your home address, okay? So once you've done this, once you've set up a business credibly, then you come in and you start getting these trade vendors, Uline, Quill, another one that you can use as well as Fargo, Granger. And when you have about 5 of these kind of vendors on your business credit report, then you have a report and score that helps you obtain all different kinds of loans, okay? Business credit reports is important to a business as consumer credit is to you getting a loan on the consumer side. So by building business credit, it makes it easier to get all kinds of loans. So for example, On Deck is one of the biggest alternative lenders that's out there today. AD, thanks. I'm glad to be back. So On Deck is one of the biggest online lenders that's out there today. They look at business credit reports. We have a stack of denials from people that go to On Deck to get a business loan and are denied because of business credit. So by building your business credit, you become more lendable, but you can also get a lot of money in the process. Now, Monopolize Your Marketplace doesn't report like they have in the past. Uline does, Quill does, Granger does. So get about a handful of these accounts, and once you get to about 5 or 8, then you're able to move on to Staples and Office Depot and Amazon, credit with most major retailers. And then with about 10 to 14 accounts, you can move into fleet credit. You can get auto vehicle financing. You can get Visa cards, MasterCards. You can get American Express. So business credit's always my favorite way to get funding because anybody can get it. If you have a business, you can get it, and you can move up fairly quickly in the ranks. Okay, so you can see here that a lot of people are getting $20,000, $30,000, $40,000 credit lines. We're having clients now getting $50,000 Amex, $100,000 at PNC, $50,000 at PNC. Pilot Flying J, PNC, and Amex are hot and heavy with lending on no personal guarantee credit cards right now, guys. So again, if you want to not bootstrap your business, imagine getting a 50 grand Amex or 100 grand PNC in 6 months' time without a credit check and without a guarantee. It's only possible if you build business credit. And that's why if you don't want to bootstrap your business, if you're looking for alternatives to get money instead, then business credit really has to be at the top of your list because you don't need good credit. There's no credit pull. There's no revenue check. It's no doc. And there's also no collateral required. So number two different kind of financing in number 2, angel investors and venture capital. So we're going to talk about both of these, but angel investors is where you're going to start if you're more of a startup. If you've already got an established concept, that's typically when VC or venture capitalists come in. So angel invest in early stage startup. These are the guys that will give you 25, 50, 100, a couple hundred grand to get started, and then you start moving to VC, which needs a pretty good concept and usually can then get you even millions. So they're looking for about a 20 to 25% return on their money when we talk about angel investing, and they invest less and they want less control than VCs. A lot of venture capitalists want to be on your board of directors. They want to control your decisions. These guys are here as advisors, and they may ask for a seat on their board, but they're here for an advisory role, so they don't want as much control as VC because they're not putting in as much money as what you're going to see with venture capitalists. Now, venture capitalists, are going to give you money to build a lot of tech startups and a lot of companies that are kind of beyond that initial startup phase. Okay, so they're very good for that phase kind of after initial investors. As a matter of fact, a lot of venture capitalists follow the top angel investors to be able to find the right project to invest in. So just because you get angel investing, you could be attracting venture capital exactly at the same time. So fast growth companies with an exit strategy, that's what they're looking for. VCs are only committed for about 3 to 5 years. They want you to be selling the business in 3 to 5 years. So if your goal is not to sell in 3 to 5 years, you probably don't want venture capital. You still may get in with angel investors. They're kind of in for more of a long term. But VC, again, is looking for an exit within about 3 to 5 years. And again, VC, you can get tens of millions of dollars if you have a business that looks like it's going to scale that way. And you can also get money from a network. So that's what I like about angel investors. Angel investors, there's all kinds of angel investing networks where a bunch of angel investors come together. They put in very little money, making it easier for you to get access to those funds. So with these networks, an angel investor might invest 20, 25, 50 grand in your business. It's a smaller amount of money. Now, we find per surveying that most clients are only looking for about 10 grand or less, so this is a good way to go. Angel investor networks have multiple people commit $250, $500, $1,000. So their commitment's so little, then they pool all the money together and they give you 25 grand from like 50 different investors. So there's plenty of angel investor networks that you may look out there as well. And Robert says, need help to get loan for my truck business. I have one truck. Well, if you have truck, there's a lot of different options. What you want to look at is which of these three is your strength. With your trucking business, do you have consistent revenue now? Do you have good personal credit now? Or do you have some kind of collateral like owing your truck free and clear? If you have one of these three, you can get financing. And if your credit is decent, about 650 or higher, you can also get financing for commercial vehicles. So if you want to talk a little bit more about that specifically, Robert, just give us a ring at 877-600-2487. So business credit, everybody can get it. Angel investor and venture capital. A lot of people can get angel investors if you're going and using networks and tapping into the right sources. This is all about who you know with angel investors. Number 3 is factoring, which is really becoming one of those popular kind of financing out there. And there's a bunch of dual benefits we're going to talk about here. So what this is you're basically collecting payments on unpaid invoices. Now, this can apply to you 2 different ways. One, you either have other businesses, the government, for example, that's paying you over time. Or 2, you don't yet. Maybe you're in a startup phase, but you can start giving people payment terms and letting them pay over time. Believe it or not, this is one of the biggest things that people that may buy your company look for as an asset, and here's why. And I just learned this the other day from people that buy, from a guy that's what he does. They buy and sell businesses. They like account receivables because they're an asset that can easily be used to borrow against for them to get an SBA loan to buy your business. So not only does this help you give your customers better terms, okay, it also helps you get financing, and it also helps your business be more appealing to potential people who may buy the business. So a lot of benefits. So factoring is when another person pays you over time. So for example, in our world, okay, we allow our clients to pay us over 7 to 9 months. Those are called account receivables. They owe us that money over time. So you can use those account receivables, borrow against them to get financing, which is awesome. Credit doesn't matter here. Personal credit doesn't matter. Matter of fact, you can even get this kind of financing now with no personal credit check. If you go to creditsuite.com/fundbox, you can actually get a source that will give you access to this with no personal credit check, which makes it awesome. So what happens is the company goes to the people that owe you the money. They're the ones that will then collect the money, so you don't even have to worry about that part. And once they collect the money, they pay you the difference of what's owed. So the way factoring works is, let's say you have $100,000. And you have $100,000 that people owe you and they're not going to pay you for 90 days. The way factoring works is you can get up to 90% of that money advanced to you the next day. Then the other, which would be 90 grand, then the other 10 grand will get sent to you after the actual invoice is paid in full. So instead of you waiting 90 days to get paid, you get that money 90% advanced the next day instead of waiting 3 months. Obviously eases cash flow, and then they collect their fee, which is as little as like 1.1% per every week the money is outstanding. So then they collect their fee and pay the difference when the invoice is paid. No credit check for this. A lot of sources have no time in business and no credit check, so this works good for even startups. Now again, if you don't have customers with unpaid invoices, considering letting your customers pay through term, pay over time, and you can use that as a basis to get financing, and it also makes your business easier to sell as well, just so you know. So number 4, SBA. So not every company is going to qualify. SBA requires all 3 of these. So when I look at can you get money or not, it really comes down to this. You need a strength to usually get loans, right? Unless it's business credit. Business credit doesn't require a strength. But a loan and a credit line, you either need cash flow, credit, or collateral, right? So we just talked about account receivables. Those are collateral-based financing. The more of these you have, the more money you can get. If you have one of these, you can get revenue financing or unsecured financing or collateral-based financing like AR financing. But let's say you have both 2 of these, cash flow and credit. That gets you term loans. That gets you lines of credit. So people that tell you, like your accountants, to write off all of your profit at the end of the year are crazy. Don't do that. Even showing a little bit of profit on your tax returns with average credit, 620 or higher, open up term loans and line of credit. Now, if you have all 3, cash flow with per tax returns, pretty good credit, 680, 720 or higher, and collateral, then that's when the SBA really comes in and has a lot of different options for you. So they have loans, and they also have what are called cap lines, and cap lines are their lines of credit. There's about 5 different lines of credit that they actually have. Now remember, SBA does not provide loans. What they do is they set the guidelines and they ensure loans that are available through places like your actual bank, okay? So what that means is that you're not going to go to SBA to get money. You're going to go Bank of America to get money, and Bank of America is the one that plugs into SBA's guaranteed funds, okay? These are called lending partners. So why do you need to know this? Because of this. When you walk into a big bank, a Bank of America, a Chase, a Regions, any of those bigger banks, they're all using SBA loans, which means if you don't have good credit, cash flow per tax returns to show a profit, and collateral. If you don't have all three of these, you're not going to walk in your bank and get a loan. Don't even go to your bank to get a loan. You're better off to use something like these online small business lenders, right? Balboa Capital and Bluevine and Bond Street and Can Capital and Fundation and Funding Circle, Cabbage, LendCred, Fundera. These kind of sources are what are called alternative lenders. Now, these alternative lenders now account for 98% of all funding in this country comes not just from this group, but from what are called alternative lenders, and all of these classify as alternative lenders here, okay? So the big banks that offer SBA loans now only account for about 2% of business funding per the Department of Revenue. And the reason for that is that alternative lenders will get you money if you have one of these strengths, whereas SBA requires all three. And you have to be a really well-established business to typically have cash flow in 3 years tax returns, good credit, and then collateral. So usually you don't get this in a startup phase. You usually get this the first 2 or 3 years of funding from one of these type of sources. And then you get financing from SBA as you're a little bit more established. This is like the premier place you want to end up, but you can't get there without cash flow, credit, and collateral. Number 5, microloans. Love these. Nobody knows about them. It's quiet. Shh, secret. This is where you want to go. microenterpriseworks.org. So these are not from regular lenders. They're from what are called micro lenders. And this is money anywhere from $500 up to about 35 grand. Okay, and what happens is you got to find usually an association that offers these micro loans, okay? So you should go to microenterpriseworks.org. Not a lot of people know about this. So it's good because there's all kinds of money available that people don't know about and aren't even accessing. You can't get micro loans. I shouldn't say you can't get these from banks. SBA is now experimenting with some microloan products. But what I will say is that you can get these from microloan lenders, places like microenterpriseworks.org, where you can get $500 to 35 grand. Check it out. Number 6, bank loans, okay? They're going to need your personal guarantee. They're going to need a social security number. They do offer some loans not offered, are not insured by SBA. But again, for the most part, bank loans, number 6 and number 4, are not for the faint of heart. These are for more well-established businesses. And to get a bank loan, you have to go through number 1. You have to build your business credit. You cannot get a bank loan through SBA unless you build your business credit, because they pull a score called the FICO SBSS score. FICO SBSS is a pretty crazy score. It combines business credit and consumer credit scores. But if you don't have business credit, your FICO SBSS score cannot be high enough to get an SBA loan. Now, you also should know when you go to your bank to get money, you're dealing with what you need to have. Your bank credit score needs to be high as well. And that's based on the 90-day balances that you have in your account, your average daily balance over 90 days. So you have to keep at least $10,000 in your bank account on average for 90 days to have what's called a low 5 bank rating. And that bank rating is absolutely necessary in order for you to be able to get a bank loan. So remember, if you're ever going to walk in a bank and get a loan, you have to have good consumer credit. You have to have good business credit. You have to keep at least 10 grand in your bank account for 90 days before you apply to have good bank credit. If you don't have good consumer, bank, or business credit combined, you just cannot get bank loans, nor can you get SBA loans. So these are again, not for the faint of heart. These are for more well-established businesses. Crowdfunding. Next month, we're going to do a whole live session on crowdfunding, but this is from places like Indiegogo and Kickstarter. Now, a lot of platforms won't release the money to you if you reach the goal, so you got to set a reasonable goal. Now, some of them offer flexible funding, where they'll give you the money even if you don't reach the goal. You need to know this term, flexible funding, because it determines if the money will be released to you whether or not you do or don't meet the goal. It's very, very, very important. Now, these guys usually take a percentage of the donations. That's how they actually make their money, okay? And again, you're not going to typically get crowdfunding with a really straightforward business. So if you're going to manufacture pencils, then you're probably not going to get it because there's a million pencil manufacturers out there. But if you're going to create a pencil that doesn't need to ever be sharpened or ever need or ever go get smaller as you use it, well, that's something groundbreaking that you probably could get crowdfunding for. So again, donors are going to want to connect with you. They're going to want to feel like they're part of the project. You're talking about new projects, something new, something different, something artist or something along that line of being unique, okay? A perfect crowdfunding platform I saw was this thing that goes to the top of the stairs, and it's a slide that makes your stairs like a big slide. That was awesome. Okay, that's a crowdfunding thing. It's unique. It's different. So crowdfunding is a great way to go. Now, there's all different kind of levels that you should know about, and I won't go through a lot of these details because we're going to go through it next month. But just know that the platform you choose here makes a difference. There's platforms just for art. There's platforms for technology. There's platforms for all different kind of platform. So find the right platform that fits for your project, and then also make sure you set a reasonable goal. And my other advice for you with this is to set up investors. Line up donors before you even need them. Because a lot of times the most successful crowdfunding campaigns already have donors lined up, and it's going to rely on you sharing on social media. A lot of people think you're just going to put something on a crowdfunding platform and get money. It doesn't work that way. You're going to really need to make sure that you come in, that you share it on social media, and you have donors lined up for crowdfunding to typically work. Now, I skipped number 7, so let's jump in. Business credit cards. Now, business credit cards is a little bit different than business credit, because you can get these with providing your Social Security number. So if you provide your Social Security number, there's all kinds of business credit cards out there that can work for you. But again, you want to make sure they only report on the business credit reports, not the consumer credit report. Now, that makes a great point. If you want business credit cards, you should consider a kind of financing called unsecured business financing. With unsecured business financing, you're dealing with a finance source whose whole goal is to secure as many business credit cards for you as possible. Now, what's unique about these sources is they're getting you about 5 to 8 cards. So it's about 5x whatever you would get on your own. You need about a 680 FICO score to get cards that report on the business credit reports. You'll need about a 650 FICO to get cards that report on your personal credit reports. Preferably, you want to have a 680 FICO to get the ones that report on your business credit reports. Now, the finance sources are going to charge you a fee, and they'll roll it into the money just like with an SBA loan. And you can't have bankruptcies and foreclosures and tax liens, and you can't and really shouldn't have any derogatory items unless you're getting the personal cards. They're a little bit more lenient. They're going to want you to have no late payments in the last 12 months. Okay, they're going to want to make sure that your balances and ratios are right, under 30% utilization. Personal credit cards are more lenient, up to about 50-60%. And they're also going to want to make sure you have less than 6 inquiries in the last 6 months. Okay, now with this program, you can get up to $150,000 in financing. You can get credit lines so you can take the cash out on them, and you get 0% interest for 6 to 18 months. That's a big deal, guys. This is the only program that exists where you can get 0% and take the cash out. You get the benefit of credit cards with the benefit of credit lines taking the physical cash out. So amazing program. Now let's say you don't have a 680. Well, in that case, then what you want to do is rely on a guarantor. Look, 75% of businesses that get money get it from family and friends. Instead of relying on a family or friend to give you money, rely on their credit to use as a guarantor. Remember, you can get accounts that report on the business credit reports. So it won't adversely affect their credit at all unless you were to default. So just keep that in mind. So this is a fantastic option to consider to be able to get business financing. Now, Sherry says, how can I get enrolled in your program to build business credit for when you start? Well, you can give us a ring. There's a couple things you could do, but the best thing to do, Sherry, is just give us a ring. 877-600-2487. 877-600-2487. If you forget the number, just go to our website, creditsuite.com, and we'll talk to you more. We'll do a free consultation. We'll help you get a free business credit report, and we'll talk to you a little bit more about that. And plus, we offer all these kind of funding programs to help you as well. So I love this program because you can get it as a startup. You get about 5 to 8 accounts that report on your business credit reports. So you're getting financing and you're building business credit. You're getting up to $150,000 as a startup, the highest amount I've ever seen lent to startups, and you're getting at 0% interest for 6 to 18 months. So a great program program to consider. So let's kind of go through these again. Business credit. Business credit, anybody can get it, okay? You no personal guarantee, no personal credit check. You don't need collateral. You don't need cash flow. You don't need good credit to be able to get approved. You just got to set up that business credibly. Get some starter vendors at places like Uline, Quill, Granger. When you have about 5 accounts, you can start getting Staples, Office Depot, Amazon, credit at most stores. And 10 to 14 gets you fleet credit with gas stations and fuel and auto repairs, maintenance, and also gets you Visa cards, MasterCards. Okay, angel investing. This is for startups. This is for a little bit more well-established businesses. Angel investors, you can typically get 25, 50 grand, that kind of money in the beginning stages. You can get more if you have more angel investors. Don't forget to look for angel investor networks where people contribute like $500 to $1,000 or $2,000, and they combine the pool and they give you the money that way. That's an easier way to go too. Factoring, these are other people that owe you money. If they pay you over time, these account receivables make it easier for you to sell your business because you have a huge asset, and you can get that money advanced to you instead of waiting without a credit check. SBA, not for the faint of heart. Great long-term, low-interest rate loans, but it'll only work if you have cash flow, credit, and collateral. You'll need tax returns for about 3 years to show a profit. So this isn't even going to work unless you've been in there for a few years, unless you've been in business a few years. Microloans, most don't know about these. Money up to about 35 grand. Microenterpriseworks.org is a fantastic place to go to get access to microloans. Bank loans, again, Chase, Wells Fargo, those kind of banks. But you've got to have good credit, cash flow, and collateral to get this. Business credit cards, a lot of sources that offer them. NerdWallet and Nav have a lot of different options when it comes to finding the right one. NerdWallet and Nav are probably the two best to check out. And don't forget crowdfunding. If you have something interesting and unique, Kickstarter, Indiegogo, these guys can help you, but ask for flexible funding. Otherwise, if you don't meet your goal, you won't get the money, just so you know. And then that brings us to number 9, unsecured business financing. We're a finance source, gets you 5 to 8 cards that report to the business credit reporting agencies. You build your business credit, and you get up to 150 grand in financing with 0% rates, and you can take all the cash out of this. Now, Sherry says, my phone is freezing up on every other word you said. Will this presentation be up? Yes, it will be available after we're done. All live streams will be available on our Facebook page, so you know. So another great option to go. Now, if you missed our session the other day, guys, there's a lot of kind of financing that's out there with a lot of different lenders. If you have revenue, Balboa is a great place to go. Bluevine is too. They'll get you money with even a 620 credit score. Bond Street gets you term loans, and so does Can Capital, merchant cash advances and term loans if you have average credit and better, and if you have revenue. Fundation does a bunch of different kind of funding programs that can work for you as well. Fundbox, creditsuite.com/Fundbox. They have account receivable financing. They have credit lines you can get without even a credit pull. There's not even a credit pull here. So if you manage your bank account responsibly, it's a great place to go. Fundera, Funding Circle, bunch of different kind of programs here. Cabbage is a real simple way to get money online. They use what's called artificial intelligence. So does Fundbox. So does Bluevine, where they plug right into your bank account to get you approved even faster. LendCred, very good way to go if you have revenue and pretty good credit. So is Lending Club, but they require 2 years of business. Lendio, bunch of loan programs that they offer. They kind of are like us. They offer a bunch of different kind of loans. Very good to work with. On Deck is good if you have revenue. Guys, if you have transactions going through PayPal or Square, look at their financing. You can get 30% advanced against what you put through your PayPal account. That's about 3 times the industry average with similar programs. She says, no, I already answered that. And QuarterSpot does good with loans if you have revenue and average credit as well. So does Rapid Advance. So I know I just went through these 9, but I wanted to give you access to kind of a quick overview if you missed our session 2 on what some of these online lenders do as well. So if you want to learn more about business credit building, a lot of people are asking, go to creditsuite.com/Facebook. creditsuite.com/Facebook. We also do text training tips. So if you text the word tips to this number, we send you 1 tip a week. I tell you we'll send you special notices and stuff, but we don't really do a lot with text. We only deliver 1 tip a week, so I'm not going to blow up your cell phone, and these are tips we only release if you're actually texting that number. And then if you have questions, feel free to give us a call, 877-600-2487. You can schedule a consultation and get a free business credit report at creditsuite.com/consult as well. I will be out of here next week. I will be heading out of town. I'll be at Funnel Hacker, Russell Brunson, their event. I'll be there next week in Orlando. If you're there, I'll see you there. Several people are going that have already told me. I'll be there with you all week next week, so I won't be here. But